Hello guys, so again, welcome back to part 2 of liquidity. So I hope you guys learned whatever was there before in the previous videos. It will be a continuation of the previous video. So if you guys have not watched the previous video, go watch the previous video so that you'll understand and you can write these notes of the previous video and revisit everything and then come back. So that you'll understand what I'm gonna teach you today. So yeah, we are gonna talk mostly about liquidity sweeps. So I have taught you guys where does liquidity lie, where can I find liquidity and what is liquidity in the previous video. So where can I find liquidity? Highs and lows, previous day highs and lows, support zones and resistance zones, trend line highs and lows, and also I forgot to mention there was one more thing, the different session highs and lows. I taught you about the different session basically only for this. So session highs and lows and lows and lows. So this is also a place where you can find liquidity. So that's why I taught you different sessions before the market. So I think we drew this in the previous day. So I guess these were the previous day highs and lows. So I'm going to give you examples so that you'll understand what is, I taught what is what, okay, what is liquidity sweep. It is better to understand with the examples, okay. So these are the highs, right? So what did I taught you guys? What did I tell you? Liquidity lies in highs and lows. So basically, these were daily highs and lows. So you know how to mark daily highs and lows, right? The previous day, daily highs and lows. See what happened. It just came down. It was like this. It just came down. If you go to the previous video, I guess you can see what happens over there. So I marked the daily highs and lows in the previous video. This is the same lines, I guess. So it came down, took this low, took the sweep this low with the wick, took everyone who has been has put their stop loss or something like this, whoever put their stop loss like this, they lost money over there. So they just got stopped out. This is also called liquidity sweep, is also called as stop hunt. If you guys hear it somewhere, so don't get confused. So this is called liquidity sweep. So people, whomsoever has entered this point, exactly this point, like whoever has kept their stop loss, like they might have thought, okay, this will be a uh, resistance or support. So they thought this will tap here and go, so they just put their stop loss over here and entered. So those people got stopped out over there. So there will be many orders like this. There will be people who keep thousands of orders like this. So liquidity sweep happens is mainly done by the main institutions which is running the market, the market makers. There is market makers and market. I forgot this one more thing. Okay, first, just yeah, market makers and market takers, I guess. Yeah, I don't know. Yeah, so this is where just leave whatever I said just now. I forgot what it was. I I don't know where, somewhere I heard about it. So yeah. Huh. So this is the market makers did this. So they set a trap for these kind of people who were entering long over here with the stop loss over here. Like maybe the stop loss might have been in this low. So they might have entered somewhere over here. So they were like, okay, it will tap over here. If it goes down, I'm not, it will tap here and go up. So what did they do? They just broke the support a bit and then started moving up. Similar thing happened. This was a previous day high. So they broke the structure up and then they are starting to move down. So whatever liquidity, whatever highs and lows where next liquidity lies is where the market moves. So I gave you a rule. I think you have, I just told it. So rule number one of market behavior. Number one of market behavior. Uh, okay. So that is market always moves in search of liquidity. See, this is the rule number one. Rule number two, we will discuss in the future videos. Okay. After liquidity, I'm gonna teach about. I guess I'll teach about fair value gaps. Okay. At that time, I will tell the rule number two. So write it down. Do something. Do some markings or like this. Or this is really important. So market moves in search of liquidity. So there was a liquidity here. They got they swept out this liquidity. Where is the delete button? Yeah. They swept out this liquidity, like they broke this low. People who are, people who trade support and resistance, they might have been thinking like, oh, there's a breakout of the support. So the market is going to move down more. That's what they are thinking. But what is the market doing? They are manipulating them. So this is how people lose money, guys. And there are people, I'm not telling there are people who are not profitable trading support and resistance. There are people who get profitable trading support and resistance, but see, I don't want you guys to trade with support and resistance. So this is basically what I meant. So they do this. They'll be like, they're gonna sweep this liquidity. There has a lot of liquidity in the below this low. So they sweep this liquidity, move up. Next liquidity is over here. They took this liquidity. This is an internal liquidity. So this is internal liquidity. I hope you guys learned about it. I taught you. Yeah, I did tell you about internal liquidity. So internal liquidity or low resistance liquidity. It is like the liquidity which is inside the major highs and lows. So this is one of the internal liquidity. So this is like a support. See, two tabs are there. Okay, so this is an internal liquidity. It took this internal liquidity. Sometimes it will just take this and go down. That's why internal liquidity is there. But there was really closely there was an external liquidity, which is this and this. So this took these two and came down. So always market moves in search of liquidity. So they took this and then most probably it is going to go down sweep one of these liquidity or this one this low. Either they will sweep this low or this low. Where is it? Where? Oh, which way? Okay, alt. You can also mark this line with the shortcut alt J. See this low. It will go and tap one of these or this low and then move back. This is how the market moves most of the time. For basically mostly for Euro USD, I trade mostly Euro USD, so I'm used to these patterns. And market always go after liquidity. So see, there was liquidity over here. It took this. There was better liquidity. External liquidity is more stronger. If you guys remember, I have told you that external liquidity is more powerful. So this and this is more powerful than this small liquidity over here, small liquidity over here. If you go to lower time frame, it will be a highs. Okay, I can show you if you want. So this is I'll just mark this. Okay, just to show you. So if you guys don't understand why is this a liquidity, so this is like a wick. So if you go to a smaller time frame, uh, see it became a high. Like it takes this much, 1 minute to form a candle. That's why it's showing like this. So I hope you just have to be experienced in the market so that you'll understand this. So these are all highs, okay, guys. These are all highs. These small things because I'm in a 15-minute time frame. If you're going in 1 minute, 1 hour time frame, also it'll be these things will be a high also. This has liquidity also. These small things. See, this had liquidity like there was liquidity over here. Let me delete everything. Okay, let me delete all the drawing for now. See, there was liquidity over here. I'll mark this. There was liquidity over here. What happened? It swept, went down to the next draw on liquidity. So this is the next draw, took it out, and this is also a next draw, took it out. So there's a liquidity sweep. I'm gonna show you guys more examples. So this was an example. See, You can see another example. Let me show a better example. Those are, see, okay, see this. See this, guys. These were lows, right? This was the lowest low, or this was also low. So this was the lowest. So what happened? It took this low, took the liquidity, started moving up, targeted this high. So this was the high. So this is where we have to learn about breakout structure. I'm going to teach you about how to use liquidity sweep and breakout structure next time. If you guys can figure it out, try to figure it out. So liquidity sweep and breakout structure. See over here. This was a low, right? Example, next example. Isn't this a low? Yes, it is a low. What happened? It broke the structure, went up, targeting these highs. So you could have entered over here, like if you guys were really good at enter. Okay, shit. This is the other one. You could have. Uh, Sorry guys. Wait a second. Lawnmower is there. So yeah. Okay, so you could have targeted this low, and then if you had entered in using breakout structure, you could have targeted this low and then this high. So it is easily a 1 is to 4 trade. You know how to calculate 1 is to 4 risk to reward. Okay, this is 1 is to 4.909 trade. Another example. Let's see another. See over here. See everywhere market runs in search of liquidity, guys. See this example. So it was an equal high. There was what did I say? Equal high has liquidity. So what happened over here? Just swept out the high with the wick. See this wick? It is fake out. Okay, people usually breakout traders, what they do, they enter long. They see this breakout structure. I mean, breakout of this support, and they will be like, the market is shifting, and they will enter, and they will be like, they'll get screwed over here. This is how they lose money. People who are, the newbie traders who enter into the market, because I was one of those in the starting. So I used to, so what was a long position, so they'll be like, they saw this breakout, they'll put the stop loss over here because this is the recent low before the breakout, and they might go for a 1 is to 2 or something. 1 is to 2. So what happened? What happened over here? It went up and then it just came down. It took the liquidity and went the opposite way. So liquidity sweep over there. Another example of this didn't get swept. Okay. This, can we tell this as a liquidity? Yes, we can. This is a liquidity swept out, moved up. There is a break of structure over here, break of structure, and there's a order block filling over here. So it is a perfect trade. Order block, fair value gap, and then yeah, 79% extension is also there. Yeah, good. This was a proper trade. So I hope you can understand another example of liquidity. See, this is a liquidity sweep. Swept the lows, moved the opposite direction, took the high. Another example over here. Everywhere there's an example. See, took the high, moved the opposite way, targeted this low. This would be your target. Or there are multiple lows, so you can target any of these. Like you can use partial profit for this one. See another example. Wait, let me find a more example. Here, see this. You can also see it like this. See, this was a low, right? Took the low, went up, went for this high. Liquidity sweep. Is it hard, guys? Is it hard? Just comment down below. Is it hard? No, it's not. People are complicating it. Is there? See, another liquidity sweep. Liquidity swept, moved upwards. Took this. No, I mean, it took this basically. This is how it went for the lower resistance liquidity. It didn't go for the high resistance liquidity. See, this is some few examples of market taking low resistant liquidity and going down. That happens a lot. So you have to be experienced to find liquidity sweeps. So right now I'm doing hindsight analysis. So what is hindsight analysis? It's like basically I'm scrolling back to the already formed chart. Live chart, everything will be different. Okay, this is not it is not as easy as this what I'm doing right now. So I want you guys to go to trading view, go to any pairs. Like if I go for JVP USD also, it similar thing will be happening 100%. Where is the starting? Okay, we see liquidity sweep. Can you see liquidity sweep, break of structure, targeted this lows? Again, liquidity sweep, break of structures, liquidity, liquidity sweep, break of structure, targeted this high. Let me, no matter what time frame you go, there will be always liquidity sweep. Okay. So whatever strategy you use should always work in every time frame. Okay. There is nothing like okay, there it will only work in 5 minute time frame. It will only work in 1 minute time frame. No, guys, every strategy market should work whatever you're doing the market in every time frame it should work. So I'm just showing you examples. Okay, let me see. See, low, liquidity sweep, went up, 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 target. This is the one which I showed previously. So this is 1 minute time frame. So that's why it's so complicated looking. Like more candles have came. See this low. You can also say this is a liquidity sweep. This was a low. Like this was a support. See, the market was supporting. So swept, moved up. Where did it go? Yeah, it targeted. See the low resistance liquidity. Targeted this low resistance liquidity. So let me check more. See liquidity swept, went up. Should I draw this more? Let me show. Let me go for 1 minute, 1 hour time frame. I'll show you everywhere this is happening, guys. Everywhere liquidity sweep happens. That's how the market should move. See, this is not a liquidity sweep, guys. Wait. See this. Isn't this a low? Took the liquidity, went up, targeted the high. No matter which time frame you go, this should work. You don't go for 6 months or 1 year time frame. You're not gonna trade with 6 months or 1 year. Basically, 1 hour, 4 hour, 1 day, 1 week, whatever you see there. These are the places where you can find these things. So yeah, even this. See, this was a high, right? It swept the liquidity and started moving down. Again, again, let's go to the lows because yeah, see, liquidity sweep, break of structure goes up. See, you could have targeted this. Ideally, you would have targeted this, but the market went up so far. Like you might have entered somewhere over here. You might have kept your stop loss over here. Market would have you would have taken a trade like this. So it's still a 1:4 trade. You could have taken, but the market went too high. Like that would have been, oh shit, oh shit, sorry. So that was, oof. You could have gained a lot of money, guys, with this one trade. What is it? 1:11. Wow, 1:11. If you risked $100, you would have gained $1,100. It was that kind of a trade over here. Hmm. Again, liquidity sweep. Let's see. Okay, your homework for you guys today, right now. You have to go and do this. Go to any pair, forex pair, or you can go to Nasdaq or S&P 500. No matter what, go there, find some liquidity sweep. Find at least 10 liquidity sweep to like at least 10. You have to do this, guys, because liquidity is really important. You have to see liquidity in the market. See, there's a liquidity over here. It swept. See, it went and took this low resistance liquidity. See, this was a liquidity low point, right? It took and started moving in the opposite direction. Next liquidity is over here, but it didn't take that. It took this. Yeah, it took that low resistance. So people who have kept this sad for them, because no matter what strategy you use, there will be there will be losses. There will be points where it doesn't work. So yeah, if I would have entered this trade, I would have done this. And whatever I'm showing it is already formed chart, so it's easy for me to identify. When it's the live market, it's the same thing. I would have entered something like this, and what happened over here? The market didn't take my target. I might have kept a partial profit over here, so I would have gotten a profitable trade, but still, it didn't get my full TP. I got partial over here, and I would have entered like stop. I would have gotten stopped out or break even trade. I will talk about keeping partial profits way future. Like it'll be in the far future, I guess, because maybe after 20 videos or something. I mean, 20 videos is not necessary for me to finish this, but yeah, 20 videos. I'll say 20 videos because I like to go for the, you know, worst case scenarios. So yeah, some people might have thought this was a liquidity sweep and then it was coming down, but it did not. So this is what I'm telling. Not always. Do not think you found 100% win rate strategy, guys. It is not like that. No strategy is 100% win. If you have a 60% win rate or 50% win rate, you are profitable. Like that is how market is. If you can win out of 10 trade, if you can win 4 trade, and your one risk to reward ratio is 1:2, you are a profitable trader. I'll give you the maths next time. Okay, I will. This is another video. So see, liquidity sweep, break of structure over here, went up. Damn, took the trade. TP, guys, TP. See this. See this, guys. Liquidity sweep over here, break of structure. So you would have entered somewhere over here, would have gone up. You would have targeted this, but still it went up till here. Wow. And see this liquidity sweep. This is a high rate. I'm not drawing everything. Then break of structure. So yeah, that's all for today, guys. I hope this is enough for you guys to understand what is liquidity sweep. If you didn't understand, wait, I'll show you one more. These are the sessions, okay? Sessions. So different session. This is Asian session, the blue one. So see this. Asian session high got swept, liquidity sweep, went to the Asian session low. See what happened? Again, not every day you should trade. This was a swept sweep, so most probably it'll come down, I guess. I don't know. Let's see. But that is not a trade which I will enter, I guess, because it's too high. So yeah, see this. This is the Asian session high. This is a indicator which I used to mark the Asian session highs and lows. But I will give that later. You don't have to. You can do it on your own. Like I taught you how to mark the highs and lows. So this, see, liquid Asian session high, low. The low got took from here. London session start. So London session took the Asian low and then started moving up. It didn't move up. Okay. This was a example where we would have failed. But yeah, see, it's almost moved up. The low resistance liquidity, see, this had low resistance liquidity, it took that and went. But if I would have entered this, I would have lost this trade. I would have maybe got a partial profit from here, that's all. Let me see. Now, this is also not. I'll give you an example. Another example of session highs and lows. Mm, uh, yeah, see this. Took the low. This is Asian session low. Took it, moved up, tapped over here with the wick. You would have won that trade. Let's see. I might miss some things, but yeah. See, this is Asian session. Swept this liquidity. I mean, we would have waited it. This is a liquidity sweep, see, and then went and targeted this high. So that's a winning trade again. See, swept, took the. This is a news candle. If you guys are seeing this kind of candle, that is a news candle. See, but still, did the same thing. Liquidity sweep. I don't know what happened. Okay, that's all I guess for the video. This is you should mark it on your own. Like the pre two videos before, I taught you how to mark the session highs and lows. So session highs and lows also have the liquidity. So yeah, guys, that's all for today. This is slightly a long video, but I want you guys to get the examples. Bye bye, guys.